So, hi, good morning. You would have already seen my first video wherein I have told about the importance of Make in India, and because of that Make in India, the growing opportunities in the financial sector and the financial service industry. In this video, I'm going to tell you particular domain areas in which a lot many opportunities are coming and for which the resources are not available. To start with, opportunities in financial markets and industry, we discussed that massive funds flow will happen in the form of equity and bonds. So in both the markets, equity and bonds, but of course I'm repeating again that bond market is yet to flourish in India because there is less of tradability or less of liquidity in the bond market. But the government, the SEBI, the other regulators are taking so much of pains to develop this bond market because this is one of the massively growing markets across world, and it will happen in Indian economy as well, for which a lot many steps have been taken across. Which means in the times to come, equity market will have a massive growth along with the growth in bonds market. And the growth in the profiles are as follows. The first and the foremost profile which will be available would be merchant banking. So ideally, all the companies who have to raise money from the public, that means they have to issue shares or issue bonds or let us say debentures in the market, whether it is a corporate, whether it is a mid-sized corporate or whether it is a small and medium enterprise, if they have to raise money from the open market, they need services of merchant bankers like ICICI Capital, SBI Capital. So these all companies, they help in raising money from the market in the form of IPOs, which is ideally initial public offering, or let us say that means the company raising money for the first time from the market. And then if the company is raising again money from the market again after doing an IPO, it is known as FPO. So this whole process requires book building process wherein a book has to be built up in terms of what should be the cutoff price, what should be the band price for issuing of that shares or debentures or bonds, then IPO, FPO pricing, and then ultimately the stock listing or the bond and debt listing for SMEs and corporates in the relevant stock exchanges or relevant bond exchanges. So bond exchanges will ideally come up in the times to come. As of now, we have liquid stock exchanges, but in the times to come, there will be massive opportunities in bond exchanges as well. Similarly, the next number profile would be financing. All the corporates, whether it is big corporates, whether it is small corporates, whether it is medium, mid-sized corporates, they all need money. And in order to have money, one of the options is ideally go for an IPO or an FPO, which means to raise money from the common public in the form of equity or bonds or debentures. The second option is, but of course you can get listing as well. This is one of the massive growing fields. SMEs in India, they also have realized that they also have to raise money from the public so that they can build up their reputation in the market. See, ideally, an SME is a small in size, and every company wants to grow big in size. In order to grow big in size, a lot many SMEs, they require private equity, that means venture capitalist money into their companies so that they can rise in their life. However, the massive challenge for the private equities or the venture capitalists coming from abroad investing in SMEs is ideally how do they exit. So that means if I have invested in one SME and I have to exit, my exit option is only to get this company listed on an exchange so that I can sell my shares to the common public. So ultimately, one find that this SME has to get listed so that the private equity player can get exit route, which means SMEs listing is one of the in things. It is growing by leaps and bounds. Bombay Stock Exchange has already set up BSC SME exchange, and a lot many steps have been happening wherein a lot many push has been happening so that SMEs, more and more SMEs can get listed on these all exchanges. So this is one of the next best profile available wherein SMEs listing and private equity and venture capital arrangement of money from abroad, because the money is lying idle abroad as we discussed, because their money is not being getting invested because of less of opportunities in terms of production and consumption out there. So the investment options are coming into Indian economy. So this investment options coming into Indian economy has to come in the form of private equity or venture capital. And this money arrangement involves a lot of money flow in terms of fees which you generate, a lot of models which you work on. The third is, but of course, investment banking. Massive funds coming in the form of private equity, venture capital will lead to more of merger acquisitions, more of mergers, which will lead to dynamic profiles. So these dynamic profiles will lead to a lot of equity research. A lot many companies, they require resources, they hire resources who can do research on equity of companies, whether it is small companies, whether it is mid-size, whether it is large corporates. Second profile would be valuation. So if I have to invest in a company, what is the value of that company at which I have to invest? So that is one of the big growing profiles. Third is modeling, which can include financial modeling, which can include risk modeling, which can include merger and acquisition modeling. These all big profiles are coming up thanks to this massive opportunities. And then we have, but of course, the biggie, which is portfolio and the fund management, because every big company, SME, every big investor, he needs his funds to be managed. And big companies like Edelweiss, etc., they have been managing funds and portfolios of big companies to the tune of billions and billions of dollars. And they need resources who could intelligently, with education, backed by with good education, they could handle the funds and the portfolios of those corporates or SMEs or individuals. But of course, this equity and bond market, as we discussed, will be coming in the form of foreign exchange. And foreign exchange is one of those growing areas in Indian economy. We have already seen many people talk about foreign exchange going from way back 2008, now touching out a level of around 68 in 2016. Everyone is talking about foreign exchange. So foreign exchange is one of the growing areas. And this equity and bond market coming in the form of foreign exchange would mean that all the corporates and SMEs, they would require help from resources who have knowledge on foreign exchange. Because these all corporates and SMEs, they are gonna export, they will have to import the goods and services for which they need resources who could ideally manage their foreign exchange or convert their foreign exchange at the right time from the bank. Similarly, all those banks would also require experts who could manage the foreign exchange of the corporates and SMEs who are the clients of all those banks. You would have seen that today, many banks in all the branches, they need FX branches. So all the branches are getting converted into FX branches, meaning thereby a lot of importance has been given to a profile known as trade desk officer, wherein the person who gets a bit of knowledge on foreign exchange, he can handle the trade documentation and foreign exchange for the various corporates and SMEs sitting in banks. So this is one of the big growing profiles, and no massive education is given in this domain particularly as well. Similarly, the biggie is derivatives and risk management. Now see, point is, huge equity flowing into India. That means many players, they are investing in the equity form in the various corporates and SMEs. However, equity investment is only 1/30th or 1/27th of the total equity derivatives which has been played. That means many players, they play in equity futures and options rather than actually investing money in the company. So one person would not actually buy a Reliance share, but he would rather do a Reliance long future, or getting into options play on Reliance, or getting into option strategies play on Reliance. So equity derivatives, bond derivatives, foreign exchange derivatives, this is the in thing. In fact, everyone would like to hedge their exposure, which means to protect their exposure, because the market is so volatile that gold is moving up and down, silver is moving up and down, iron is moving up and down, share market is moving up and down, currency is moving up and down. So these all movements in the market has led to growing volatilities, and we need people who could manage or who could hedge these all underlyings. Underlyings means equity, bonds and foreign exchange through derivative products, which is ideally futures, options, forwards, option strategies and swaps. But of course, this foreign exchange derivatives, bond derivatives, equity derivatives is ideally done for two purposes. One, to manage risk, or one, to do more speculation onto it. But both this require a massive knowledge in derivatives, which is again not taught in most of the education institutes. This whole set of financial markets industry ultimately would lead to a lot of dynamic profiles, which will include merger and acquisitions, valuation, business valuation. So that means merger acquisition means two companies getting merged. So they need people who could identify whether I have to get merged with this company or not to get merged with this company, whether I have to acquire this company or not to acquire this company. Similarly, if I have to do a merger acquisition, at what valuation should I do it? So that means valuing of a company is ideally one of the biggest profiles in this domain area. Then similarly, this all stuff is done through various big models, which includes financial modeling, which includes risk modeling, which includes portfolio modeling. So this is all done in modeling structure. Similarly, these all companies, if they have to get merged, or they have to acquire, or they have to see, everyone needs money. So everyone needs money, whether to get acquired or whether to get merged or whether to grow big. So that means they need corporate finance. So corporate finance is also one of the big things. Then again, this whole happening is happening in the volatile market, for which we need risk management. Then all these funds which is coming into this corporate or with a big investor, he needs someone who could manage their funds or manage their portfolio. So these all dynamic profiles are the next in-thing opportunity in the world of Indian market, thanks to the financial markets boom, which has been coming because of Make in India, the vision of our Honorable Prime Minister Shri Modi Sahab. Now, ये सब करने के लिए, in order to do this all, we need two things. One, we need ज्ञान, and one, we need जान पहचान. Because this whole complexities of this domain cannot be handled by every person. You need a specialist in this domain, and that specialist can only come through massive jnaan, and that jnaan has to be unique. But of course, jaan pehchan will happen once you start working for a corporate, once you start working for a customer, once you build up relationships with the customer on behalf of the corporate for which you are working, and that jaan pehchan will only be everlasting or long lasting if you have got unique jnaan. Now, unique jnaan, ideally, how do you deliver that unique jnaan? But of course, unique jnaan for which you need education, a good practical education. However, particularly in Indian economy, these all domain areas are related to finance, and the jnaan on finance areas, we believe, are normally delivered either to a chartered accountant or to an MBA finance. However, chartered accountant is an expert in auditing, accounting, taxation. He is not given a hands-on practical knowledge or in-depth knowledge in all these complex fields while he is doing CA or while he is doing articleship. He is majorly an expert in auditing, accounting, taxation, laws, but he is not an expert particularly in financial markets domain. Similarly, MBA finance, from any college in India, they are ideally taught finance to a theoretical aspect, but not on practical aspect in terms of building models, building M&A models, building valuation models. So they are taught financial market subjects, but they are taught. They are not practically trained, which means the in-depth knowledge plus the practical training in that in-depth knowledge is lacking, which means this whole opportunities which is available coming into Indian economy thanks to the Make in India concept, we need technically sound resources, jnaan wale resources, knowledgeable resources, and existing fleet of people who have knowledge in finance. They have knowledge in finance, but not the practical knowledge in financial markets. So CA, knowledge in finance, particularly domain restricted to auditing, taxation, law. MBA finance has got a bit of knowledge about financial markets, but that is not in-depth knowledge. That is not a knowledge which can be practically applied, which has been delivered, which that person is delivered in his educational institute, for which you have to get into a more modernized acquisition of degree. So ideally, you can acquire this jnaan either undergoing a degree, which is one of the best degrees in particularly financial markets or related to these all dynamic markets, or if you have already undergone through a degree course, let us say you're already an MBA or you're a chartered accountant or you're a working professional, then you have to do some sort of practical certifications. But of course, the best degree in this whole of domain is ideally undergoing a CFA, which is ideally a Chartered Financial Analyst. That's a US based degree about which I have again mentioned in a separate video about what is CFA, how is it different from being a chartered accountant or an MBA finance, what edge does a CFA has, what is the cost involved, what is the time period involved, what is the combination involved for, let us say, being a BCom or a BSc or an engineer. Why should you do a CFA if you're an engineer or a BCom or a BSc? So everything about CFA I have told in a separate video. So ideally, the best degree as of now you should ideally undergo a CFA, Chartered Financial Analyst, which I have told in a separate video about that. If, let us say, you cannot appear for CFA or you do not want to appear for all the exams of CFA, then you should ideally at least get yourself trained or at least coaching leni chahiye aapko for CFA, so that you can at least have knowledge about that content. So you can have in-depth knowledge about that content, even if you are not delivering those exams. So if you are a working guy, if you are a working professional and you wish to have more knowledge about these all financial markets in depth, then you should ideally go for a CFA coaching and should also undergo under practical certifications. So practical certification in derivatives, risk management, technical analysis, fundamental analysis, about which I have also again briefed in a separate video about the various practical certifications. As of now, in Chitkara Financial Education Center, as of now, we have launched coaching related to CFA degree. So it's an IT park in Chandigarh, Rajiv Gandhi IT Park, and we have launched delivering coaching on CFA degree, so that we can give good coaching and the student can enroll himself for the CFA of US and appear for the exams and clear those exams. But of course, my team who is coming to deliver the CFA coaching are all practitioners. They are all CFAs or they are all investment bankers. Ideally, investment bankers means doing all these stuff in their practical life. So either they are a CFA or they are all investment bankers who are working and they are practitioners. And similarly, the practical certifications which you are undergoing in terms of derivatives and technical analysis are handled by me and my team. But of course, you can view our profile on our websites. So ideally, one should go for these type of degree program or certification program, so that in financial markets you can grow with huge gyan, which will let you help in building up your Jan Pechan, so that you are ready for the next 15-20 years of opportunity coming in our Indian economy. Thank you very much.